Hi and welcome to my channel again. This video is dedicated to those students who are studying cost accounting and reporting. If you are new to this channel, please subscribe, like, and share this channel. Today, we're going to discuss about the accounting and income statement of manufacturing entities as well as the job order cost system. This lecture has 5 parts. The first is the comparison of service, merchandising, and manufacturing entities in their operations, types of inventories, and costs of their product. I will not lie though, the income statement for manufacturing entities is a lot more complicated than that of service and merchandising entities. So this first part is a preparation for the next parts of this video lecture. Next is, we will be comparing the income statements of service, merchandising, and manufacturing companies because they really differ significantly in this type of FS. And number 3 is we will have to study the journal entries for transactions unique to manufacturing entities. I'm also going to give you illustrative problems with requirements or questions and give the solutions and explanations as well as the computations. And lastly, we're going to talk about the job order costing system. If you finished and understood this video until the end, then you have already finished a lot of chapters in the cost accounting subject. So stay tuned. So let's have the first topic. You already know that the business entities can be classified as service, merchandising, and manufacturing. So how do they differ in the operations? Of course, the service entities provide service to clients like a salon or a barber shop or a massage center and others for a fee. Whereas, the merchandising entities like sari-sari stores, grocery stores, and most of the wholesalers and retailers will sell finished goods for a markup. While the manufacturing entities operation deals with the buying of the raw materials and converting them into finished products and selling them for a profit. So that's it for their operations. Sir, how about their inventories? The service entities don't have any inventories that will be reflected on its financial statements, unlike the merchandising, which is goods known as merchandise inventory. The manufacturing companies, on the other hand, have 3 types of inventories. We have the finished goods or the completed goods. We also have the work in process or partially completed units and the raw materials which are yet to be converted. The raw materials can be classified into direct and indirect. Direct materials are those that are really part of the finished product. Let's say, for example, your product is a chair. The wood, nails, paint, or varnish that are found on the chair are the direct materials. The indirect materials are inputs, although not directly traceable to the output, are necessary to the production process. Let's say, for example, the scraps of wood, or the sawdusts, or the oil and other machine lubricants if you are using machine in the production of goods and other production supplies. So that's it for their inventories. Now let's talk about their product costs. The service entities has what do we call the cost of services, and the merchandising entities has to pay for the product's purchase price plus freight in. The freight in or the transportation in is the cost incurred to transfer the merchandise inventory from the supplier to the place of business. Examples of this are the labor cost paid to lift your products from one place to the other and the cost paid to delivery companies. The manufacturing entities have 3 product costs. The first one is the direct material cost, which was already discussed earlier. The other one is the direct labor for the salaries of the employees actually transforming the raw materials into the final output. Examples are the salary payments to workers in the plant, designers, construction workers, carpenters, and the like. Sir, if there is direct labor, there is also indirect labor, right? Yes, of course, but we will discuss that on the third product cost. The third product cost is known as the factory overhead, and under this are the indirect materials, which are already discussed earlier again, and the indirect labor. So what is indirect labor? Indirect labor are salaries paid to employees related to the production process or area but are not really the ones transforming the raw materials into finished products. Examples are the salaries of the supervisors and managers of the plant. With this, you can conclude that the salaries incurred by the manufacturing entities are of 3 types. If related to production process, we have two, direct labor and indirect labor. Direct labor is for the ones actually making the product, and the indirect labor is for employees whose efforts, although not traceable to the output, but their efforts are still necessary to the production area or the production process. The third one is the salaries expense in the operating expenses for administrative personnel who are not directly or indirectly related in the actual production of the entity. Examples are the salaries of administrative personnel like accountants, president of the company, HR, and the others. So that's it for the product costs. But there is a twist here in the manufacturing entity side when it comes to factory overhead. But before that, let's answer the question, why do we need to determine the product costs? It is because the pricing of the products depends on it. The business needs to know the cost of the product to determine if the price they are setting is right. Now let's go to the twist. There are two types of factory overhead that we are going to study here. One is the actual factory overhead. The actual factory overhead is composed of the actual cost of indirect materials and indirect labor, which are difficult to trace because there are a lot of items to be considered and included in here, unlike the actual direct materials and the actual direct labor. What do you mean, sir? To get the actual factory overhead, the company needs to trace items like electricity used by the plant, the maintenance supplies of the production machinery, cost of repairs of the machinery, rent of the plant, depreciation of the plant and other machineries, oil and lubricants, salaries of the plant manager or the security guard of the plant or the maintenance personnel who maintains the production area, and many more. So the actual factory overhead amounts are only confirmed at the year end. And if we are going to wait for it, we will not be able to determine the total product cost before year end. So temporarily, before the year end, manufacturing entities use the second type of factory overhead, which is the applied factory overhead. However, you need to note that even if it is not yet the year end, the company will still record and accumulate the actual indirect cost incurred and temporarily record it in the factory overhead control account, which is an OPEX account. Sir, what is this applied factory overhead? This is in the form of percentage of direct labor cost or rate per direct labor hour. Example is 120% of direct labor or 6 pesos per direct labor hour. Sir, it seems like it's unreliable. Well guys, let me tell you that these rates have been computed based on the historical experience in the past years of the company. Let's say it's now 2020. The company compared the direct labor and the actual factory overhead in the past years like 2019, 2018, 2017, and so on to arrive at those rates. So even if it is not exact, it can be a close estimate. But what will happen in the year end when the actual factory overhead is already available? The actual and the applied factory overhead will be reconciled. As to how, we will illustrate that in the later slides. But for now, we can summarize that the product cost for service entities are the cost of services, and we have purchase price plus freight in for the merchandising, and we have three costs for the manufacturing entities: the actual direct material used, the actual direct labor used, and the applied factory overhead. Now, we are ready to compare the income statements of the three. At this point, we will be comparing the income statements of the three. So the income statement for service entities is just service revenues and other revenues minus expenses equals the net income. It's as simple as that. But when we're going to talk about merchandising entities, it starts with the sales and of course expenses. However, these expenses are already subdivided into two, which are the cost of sales and the other operating expenses. Sales minus cost of sales though is the gross profit. And the gross profit minus expenses equals the net income. But how about the computation for the cost of sales? If I am a merchandising entity and I wanted to compute the cost of goods that I have sold, then I'm going to ask, do I have merchandise inventory beginning? Those are merchandise inventories in the past that were not yet sold. Do I have recent purchases of this merchandise inventory? So we have net purchases. So you have the inventories unsold in the past plus your recent purchases. If you're going to add them, the sum is the total goods available for sale, or you can sell them both. Now, let's discuss on the net purchases. Why is it called net purchases? It is because it is not just composed of the acquisition cost. You're going to add also the freight in, and then you are going to deduct the purchase returns and allowances for the damaged units and the purchase discounts if you are given purchase discounts. So, are the available for sale all sold? Naturally, no. So we have merchandise inventory end. So the available for sale minus the unsold currently, then you are going to get the cost of sales. So how about manufacturing entities? Manufacturing entities are similar with merchandising entities because they also start with sales, and you're going to deduct the cost of sales in order to get the gross profit also. And then from the gross profit, you deduct the expenses, the general and administrative expenses and the operating expenses, then you're going to get also the net income. So where are they different? They are different in the computation of the cost of sales. If you're a manufacturing entity and you wanted to get your cost of sales, then first, you need to get the direct materials used by getting first the direct materials beginning. Those are the direct materials in the past that you have not used. And then you ask yourself, do you have recent purchases for those direct materials? Then you add that in order to get the total raw materials or direct materials available for use. The unused in the past plus the recent purchases equals the direct materials available for use. And of course, these direct materials available for use will not all be used. So we have the direct materials end. So you deduct it, then you are going to get the direct materials used. So it's based on logic. The available for used minus the unused, of course, the answer should be the materials used. Now, is this the only cost needed for the raw materials to become finished product? The answer is no. You need to have the actual direct labor cost also and the factory overhead, which is applied. Again, this is applied. So these three are what do we call as the total manufacturing cost. So maybe you have also some units that have been started in the past but are not yet finished. You need to get the cost of that because that is what do we consider as work in process beginning. That is supposed to be added with the total manufacturing cost to get the total goods placed in process. So, in order to understand the logic, think of the total manufacturing cost as the started units now. And the work in process beginning is started in the past but still unfinished. So these two, the started now plus the unfinished units, will be placed in process, and their costs, the two of them, is what do we call as cost of goods placed in process. Now, you are going to ask, are the goods placed in process all finished? Normally no. So we have the work in process ending or the cost of the unfinished now. So you're going to deduct that and you're going to get, of course, the cost of the finished now or cost of goods manufactured or the finished now as a shortcut. So you are going to ask yourself, maybe I have some finished units also in the past but were yet to be sold. Then the finished now plus finished in the past equals the total goods that I can sell or total goods available for sale. Now, is this available for sale sold? Not all. So if not all, then we have finished goods ending. So the available for sale minus the unsold, of course, that is already the cost of sales. So that's it for the cost of sales of manufacturing entities. But before we finish this part, I would like to tell you that if ever you are going to add the direct materials and the direct labor, you are going to get the prime costs. because they are the primary costs. And then if you're going to add the labor cost and the factory overhead, you're gonna get the conversion costs. So that's it for this particular part. Let's go to another part. So we are now on the third part. Let's have the journal entries for manufacturing entities. For direct materials, upon purchase, the entry should be raw materials or direct materials. You can use raw materials to indicate that it includes also the indirect materials, but if the indirect materials is separable from direct materials, then use the direct materials account. So the credit for this one is accounts payable under the perpetual method. Upon payment, of course, you debit the accounts payable and then you credit the cash. And upon usage, you debit work in process and then you credit direct materials or raw materials. Sir, how about the indirect materials? So in the indirect materials, they are similar on the acquisition and the payments of accounts payable with the direct materials. So what do you mean, sir? So on acquisition, you are to debit indirect materials instead of direct materials, of course, and then you're going to credit the same account with the direct materials, which is accounts payable. Now on the payment of accounts payable, they are very the same, debit accounts payable and credit cash also. So on the usage, they are a little bit different because when we use the indirect materials, we need to debit the factory overhead control instead of work in process, and we are going to credit the indirect materials account. Now let's go to direct labor. So upon incurrence of the direct labor, we have to debit work in process and we have to credit salaries payable. Now let's assume that there will be no PhilHealth, Pag-ibig, SSS contribution to simplify our discussion. So in incurrence again, work in process debit and salaries payable credit. Now upon payment, we just have to debit the salaries payable account and then credit the cash. So on the indirect labor also, they are similar, but instead of debiting in the work in process account, the indirect labor upon incurrence will be debited to factory overhead control account and the salaries payable. On the payment of salaries payable, they are exactly the same. Debit salaries payable and then credit cash. Sir, where is the applied factory overhead in this story? So the factory overhead that we're going to use if it's still before year end is the applied factory overhead. So if you have the details on the rates based on the direct labor cost or direct labor hour, then compute the applied factory overhead. And if you have computed that one, then the amount will be debited to work in process and will be credited also on the applied factory overhead account. Now, we are ready already on how to reconcile the applied factory overhead and the factory overhead control. So on year end, you need to close these two. So what are you going to do? You debit the applied factory overhead because its normal balance here is credit, so we need to debit it to close it. And the factory overhead control, which is the representative of the actual indirect labor and indirect material cost, will be credited to close it. So of course, that will not be balanced. So if the debit is lacking, you debit the account under applied factory overhead, and if the credit is lacking, you have the applied factory overhead account. Now, these are temporary accounts, so you need to close it. So these two will be closed in either number 1, cost of sales, finished goods end, and WIP end, or cost of sales and finished goods only, or you can close it to cost of sales only. Now, if the problem is silent, you use the cost of sales only. Now, I know at this point you're a little bit confused on the closing of the under-applied factory overhead and over-applied factory overhead in these three options. So I've made an illustration to clear that confusion. So here is the illustrative problem. So At the end of year 1, the following costs are incurred by ABC company. So the direct labor cost is 300,000, the actual indirect materials is 270,000, and the actual indirect labor cost incurred is 140,000. So the factory overhead application rate is 150% of direct labor. Since direct labor is already 300,000 times 150%, that is about 450,000. Aside from that, the company has sold units of 100,000. The work in process units or the unfinished is 15,000, and it is yet to be converted by 70% because it's only 30% converted, and the finished goods ending is 25,000. So let's apply what we have learned a while ago. So on the direct labor incurrence of 300,000, debit work in process of 300,000 and then credit the salaries payable of 300,000. Upon usage of the indirect materials also, we are going to debit the factory overhead control, which is 270,000, and then we credit the indirect materials account for the same amount. We have also incurrence for indirect labor. Again, debit it on the factory overhead control account and then credit it on the payable. So that's it for the recording of 1, 2, and 3. So let's record the applied factory overhead. So debit work in process, again that's 450,000 coming from 300,000 times 150%, and then credit the account applied factory overhead. Now on the year end, we need to reconcile. So we need to close the applied factory overhead by debiting it because the normal balance is credit. So you have 450,000, and then you need to credit also the factory overhead control in order to close it. Now the factory overhead control here is 410,000, which is the sum of 270,000 plus 140,000. And as you can see, the applied factory overhead is greater than the factory overhead control. So meaning there is over applied factory overhead of 40,000. So again, that over applied factory overhead account na 40,000 is a temporary account, so we need to close it. So we have the methods here. So let's start with method 1. We're gonna close it in the cost of sales, finished goods end, and work in process inventory. So we need to debit the over applied factory overhead of 40,000, and then we need to credit the 3, work in process, finished goods, as well as the cost of sales. The question is, how do we allocate this 40,000 to these 3? So the answer is, we need to use the rate of conversion times number of units. So what do you mean, sir? Let's say for example, the work in process. According to the problem, there is 15,000 work in process units which are 30% converted. So what we do is 30% times 15,000 equals 4,500. How about the finished goods? Since they're already finished, then their conversion rate is 100% times 25,000 equals 25,000. And the sold units represented by the cost of sales is 100,000, and it's also 100% completed already, so we have 100,000. You add them all up, then we're going to get the 129,500, which will become our denominator because the allocation will use some fractions. So what do you mean again, sir? So let's allocate the 40,000. So when it comes to WIP, we are going to use the fraction 4.5 over 129.5. The 129.5 is coming from here, 129,500, and the 4.5 is coming from here. So we have 40,000 times 4.5 divided by 129.5, it's 1,390. And for the finished goods, we are going to use the 25 over 129.5. The 25 is coming from here. So we're going to get 7,722. And lastly, for the cost of sales, that's 100 over 129.5 times 40,000. We have 30,888. These amounts will then be carried here, so you will have a balance entry already. Now let's go to the method 2. The method 2 is we are going to close the over applied, that is 40,000, to accounts cost of sales and finished goods only. So we need to ignore the work in process. So what will happen? So we're going to allocate the 40,000 into the 2. So we're going to use the 25 over 125. So the 25 is coming from here, and the 125 is the sum of the 25,000 and the 100,000, because again we're going to ignore the 45, which is the work in process. And then we have 8,000. On the cost of sales, we are going to use the 100 over 125, and the amount that will be allocated to cost of sales is 32,000. So that's it for the method 2. And the last method, which is the default, if ever the problem is silent, the over-applied factory overhead 40,000 will automatically be closed to cost of sales account 40,000. There is no need to allocate. And then, I'm going to emphasize again that the number 3 method is commonly used in answering problems. And if the problem is silent, please use the method number 3. So, we're already through with the theories, the entries for manufacturing entities, and the comparison of service, manufacturing, and merchandising entities as to their operations, their inventories, as well as their product costs, and their income statements. So we are ready to answer the comprehensive problem. Now, here's the comprehensive problem. Gletz Incorporated is a job order manufacturing company. Let's just stop right there. So it means that Gletz Incorporated are selling customized products based on customer specifications. So the direct materials, direct labor, and factory overhead costs are accumulated per job. Let's say, for example, you have 2 customers, so you have 2 jobs. For example, the direct materials used by job A, the direct labor, and the factory overhead incurred will be separated from the direct materials used, direct labor, and factory overhead of another job, for example, job B. So, let's continue. The company uses a predetermined overhead rate based on the direct labor hours to apply overhead to individual jobs. The factory overhead rate is 6.10 per direct labor hour. The following information is for December 2016. Job A was completed during December, but Job B was started but not finished. So, these are the other details. As to direct materials used, Job A used 45,000 and Job B used 33,500. The direct labor hours used by Job A is 4,200 hours, while Job B has 3,500 hours used. The direct labor rate is 5.5 per hour. Aside from that, there are other information. Like for example, the inventories beginning, we have the direct materials at 7.5, and we have the work in process, all Job A, 31,200. That means Job A has already been started in the past period and will just be finished now. Now, we have other amounts. Direct material purchases is 104,000, and then the indirect labor is 13,500, aside from which the company incurred supervisor salaries of 6,000, a factory rent of 7,000, administrative office rent of 1,800, indirect materials of 12,000, depreciation for factory 7,500, admin office 1,600. The requirements are the cost of sales before adjustment for actual factory overhead. The second requirement is the cost of sales after adjustment. The third is the direct materials end. And the fourth one is the work in process end. Now, upon analyzing this problem, there are 2 important points. The first one is the details with the red funds are all actual factory overhead, which will be considered at year end. The totals of those are 46,000. That means this actual factory overhead should be stored in the factory overhead control account. These red ones. Sir, What about admin office rent? Again, this is administrative office. This is not related in the production process or related on the production area. So this cost will become part of the operating expenses and will not be considered as factory overhead. As well as the depreciation for the admin office. You need to ignore that because on the requirements, there is no mention about operating expenses. So only the red are considered as indirect materials and indirect labor or factory overhead, specifically actual factory overhead. Aside from which, we have the second one. Job A was already started in the prior period but is finished only now, only on this period. Job B was started currently but was not finished. So these are very important in solving the problem. So, based on our knowledge earlier, we said in order to compute the cost of sales, we start with the direct materials beginning. And there's no problem because the direct materials beginning has already been given, which is 7.5. You add the direct material purchases, and again, there is no problem because it's already given in the problem, that is 104,000. So you add them, and you're going to get the direct material available for use, which is 111,500. Now, we have to deduct the direct materials end. Is there a given on the direct materials end? There's none. However, the direct materials used is given. So, that is 78,500. How did we get the 78,500? That is 45,000 plus 33,500. Here, the usage of job A and job B. So, if we have this, we can just deduct 78,500 from 111,500 in order to get the direct materials end, which is 33,000. So, that's it for the direct material used. Now, the next is, we're going to add the direct labor, of course. So, on the direct labor, although it has not been directly given, you have been given details. Let's say, for example, the direct labor hours used by job A and job B and the rate. So we're gonna use those things in order to compute the amount for direct labor. So how do we do that? So we have our computation right here. We have the direct labor hours used by both job A and job B is 42 plus 35 equals 7,700 hours. So you just need to multiply it with 5.5, which is the rate per direct labor hour used. So we have 42,350. So you can already put here 42,350. And next is, we need to find the applied factory overhead, which is easy. Why? Because the direct labor hours is already here. And of course, the rate has already been given. So you just have to multiply 7,700 hours times 6.1. Then you have 46,970. And you can put it right here. Now, these three, if you are going to add them all up, you're gonna get the total manufacturing cost of 167,820. Now, based on our knowledge earlier, we need to add the WIP beginning, which is, according to the problem, is job A. Now, it's already given. That is 31,200, so no need to compute. So, 167,820 plus 31,200, then you have the goods placed in process, 199,020. Now, you deduct the unfinished, and we all know that job B is the unfinished. However, the WIP end cost or the job B's cost was not given, so you need to compute that. So how do we compute the cost for job B? First, let's talk about the direct material used by the job. According to the problem, job B used 33,500 direct materials, and we go to the direct labor. It used 3,500 hours times 5.5, that's 19,250. And the applied factory overhead is easy because you just have to multiply the 3,500 hours times 6.1, then you have 21,350, and then we have 74,100. So the cost of job B, which is the WIP end because it is unfinished, is 74,100. So you record that, and then you're gonna get the cost of goods manufactured or the cost of the finished or job A, because it's specific in the problem that job A was finished. So we have 124,920. Sir, we do not believe that the cost of job A is 124,920. Based on this, we wanted to have a specific computation like this one on the job B. So let's prove that job A's cost is really 124,920. How do we do that? So first, let's put here the cost of job A in the prior period, 31,200, and then it used direct materials worth 45,000, and then it used direct labor. In number of hours, that's 4,200 times 5.5, the direct labor rate. So we have 23,100, and the applied factory overhead, of course, is 42 times 6.1, so 25,620. You add them all up, and I'm pretty sure that is still 124,920. So no need to be confused on what is this 124,920 because we have already our proof. Now, aside from that, you need to add the finished goods beginning, but since there is no mention with the finished goods beginning, we put there 0. So meaning we have the goods available for sale of 124,920 also. There is no mention again with the finished goods ending, so we put here 0. So we have our cost of sales before the adjustment for actual factory overhead of 124,920. But since we need to reconcile the actual factory overhead or the factory overhead control account and the applied factory overhead, let's make an entry. Let's close the applied factory overhead by debiting it. The applied factory overhead again is 46,970, and then the factory overhead control, which is, I've mentioned in the analysis, is 46,000. Then there is an over application of 970. And since there is no mention on how to allocate this or how to close the over applied factory overhead, then we're going to use the method 3 that I have said on the last slide. So the over applied factory overhead will be debited to close it, and then you close it on the account, which is the cost of sales, 970. Now, this 970 will be deducted on the cost of sales. Why? Because the cost of sales normal balance is debit, and according to here, it should be credited. So since they don't have the same normal balance, you deduct 970 from 124,920, and then we have the cost of sales adjusted, 123,950. So if we're going to go back to the requirements, the cost of sales before adjustment for actual factory overhead is 124,920. The cost of sales after adjustment is 123,950. The direct materials end is 33,000, and the work in process end is 74,100. So we are now on the part 5. Part 5 is all about job order cost system. So what is this job order cost system? As mentioned a while ago, it's a cost accumulation system used by companies who manufacture made-to-order or customized products based on customer specifications like made-to-order furniture and others. The costs, raw materials, direct labor, and factory overhead in this system are accumulated per job. Let us say, for example, your company has 2 departments, 1 and 2. Each of those departments will make a job cost sheet per job and list all the direct material cost, direct labor cost, and applied factory overhead incurred by a particular job. So we have an example here of a job cost sheet. So we have the milling department, and it is working on the job number 2B47. In here, the department listed the direct materials, the direct labor, and factory overhead used by job 2B47. There is also a cost summary, and as well as the date it started the work and the date it was completed. So for example, If the good still needs further processing from other departments, the other departments will also prepare a job cost sheet for job number 2B47. And if it is 100% complete already, all the job cost sheets by the different departments will be summarized to get the total cost of the job 2B47. So, that's the end of our content for this video. You're welcome to play, pause, and replay this video until you are satisfied. And if it helped, help me also by subscribing, liking, and sharing this video to other accounting students, and also click the notification bell to be updated on my next episodes. Thank you.